Okay, I believe we are live. Welcome everybody. Okay, here we are. Hello everybody. So, my name is Hubert and I'm a new addition to the trading strategy team. And I'm going to be teaching you one of the main, I think, quite successful strategies, which is RSI 80/20 strategy. Now, I hope that you can hear me all right and everything. I'm trying to just find my chat window quickly. Sorry, 1 second. I'm just going to get my last few technical bearings. Okay. Great. Cool. So, unfortunately, I don't really see the chat window, but I'll just get going anyway, and maybe one of my colleagues will be able to point that out to me as we go along, so that I can see your questions and everything. Okay, so my name's Hubert. Like I said, I'm. You might have seen a little bit of my background in the promotion of this webinar, and yeah, I'm basically trading full time these days, and I've developed my own style of trading that I'm applying. There is many different styles of trading that are successful and can be successful. I would say a lot of the trading success, maybe as much as 85% is actually psychological strength, and I'm sure at some point the guys from Trading Strategy Guides will probably be covering that in some webinars as well. But it's of course it's important to have a really good method that you apply that kind of works. Otherwise, you're really starting off on the wrong foot. So I think without further ado, let's just get going. So here we go. Okay, so some of these slides, just don't worry about. I'll just be skipping through them. So yeah, probably that's a good reminder. If you wanna, be focused on this, just make sure that you are away from all distractions. Also, please be aware that this is not any form of financial advice. It's just given for educational purposes, and that, of course, trading always involves a high level of risk, and your losses may even exceed your account balance and all of that. So just be aware that the information that's given here is not financial advice in any way. Okay, so basically we're going to be talking about this RSI indicator a lot, because that essentially is the core of the strategy. You may have obviously come across the RSI indicator, because that's one of the standard indicators that comes with most trading platforms, and that's often the one where people talk about oversold and overbought things. So it is quite a handy indicator. It is a momentum indicator, and what that means, in case you don't know, sorry, I'm just trying to, sorry, give me 1 second. Still trying to set up this chat window, and I've just been sent a link here. So 1 second, please. Okay, great. I think I can see the I can see your comments now, I believe. Great. Okay, cool. Okay, great. Now I'm on the page. I can see you all. Perfect. Okay, so let's continue. So I'm going to show you a chart. So just to give you an idea of what momentum means. So you should be able to see my chart very shortly. Okay. So here, basically momentum is really the kind of just simply the power behind a move, a price move. So so basically momentum is either what so-called impulsive, which is when it's moving really fast in one direction and strongly, or it's corrective, which is sort of when it goes choppy and sideways. And there's many different ways of measuring that, basically. But just to give you an example, say this is the Euro USD chart. Now the current chart, and here, say for example, here you've got all these blue candles going up, and you can essentially, even without any indicators, you can just say we've got bullish momentum here, because there is just simply very little power going in the downwards direction. That's all. So it's a quite simple concept, but it's important to understand that. So therefore, the RSI indicator that you're seeing down here, the second one, it kind of maps that, so you can like see, okay, price is going strongly up, and the RSI indicator is kind of following that more or less. So, and basically that's what it is. When we going to cover other areas, I'll be, I think, talking a lot more about the details of how you actually look at price move, like just the candles themselves, and get really a feel for what price is doing. Is momentum is like an impulsive momentum about to run out? Is it soon going to become corrective? What does different kinds of corrective momentum look like, and all of that? But for this time being, just so you know more or less what momentum means, that's my explanation. Okay, so let's go back to slides. Okay. Cool. Excellent. All right. So just a bit more background. Basically, it was indicated by a guy called Wells Wilder, quite a few decades ago already. And it's true, it's one of the most popular indicators. This is just basically the mathematical formula of how that line that you saw on the bottom of the chart actually gets generated. You don't have to know anything about that, really. It's basically, it takes like historical data and compares the sort of the up movements and the down movements with each other to come up with this basically this chart, this trend line, and that's how that indicator gets created. Don't need that slide. Okay. Okay. So basically, let's get, in order to start the strategy, we need to adjust some of the settings. So if you now go back to your charts, which I will do as well, you will see. So in MetaTrader 4, which is what I've got, and I think a lot of people have, unfortunately, I don't have TradeView, so you might have to look that up, how you get to your indicators in TradeView. But basically, in MT4, you just click on the symbol at the top here, and you will find the relative strength indicator under oscillators. And there you see it, relative strength indicator. So that means RSI, relative strength index. Okay, so then you get this window, and when you click on the tab levels, in yours, these levels are most likely showing 30 here and 70 here. And that's because that's the default settings, and I've changed them already to 20 and 80. Because we'll be using those values for the strategy. And so in order to change them, you just double click here, you change the value. So I mean, I could change it back to 30, but I will obviously leave it at 20. And click add, I believe, yeah. And so you do the same here, double click and change it to 80, and then click add. Now, then what that means is oops, now I've got two. Hold on, let me delete one. Okay, so what that means is that you have now these two lines, these two dotted lines, and they will show you an 80 value level and a 20 value level, and basically this will be sort of key thresholds that we'll be using for the strategy. Now the other thing you've got to change, so if you go, basically if you clicked OK already, and you want to change the further settings, you just click into the, like say on the line itself of the indicator, and then you should see that little right click on it, RSI properties, and then you're back in here. And what we also got to change is here in the parameters tab, the period value, which I think is originally 14, but change that to 8. And that simply means that it will take a different sample base to come up with this line, and 8 makes it a bit more responsive. So if you use 14 or higher, it looks very smooth and you don't see as much detail, but with 8 you see a bit more detail. So once you've changed that, let's click on OK, and off we go. Then that should be good. Let me check the chat window to see if anybody's got problems with that. Can't see anything. Seems all okay. Great. Okay. So back to our slides. So we've changed the values. Yeah, so basically we'll be using that indicator, but there'll be a whole set of strict rules that come hand in hand with that. So you can't just use you can't ever use an indicator and just think, oh, you know, whatever, or once it goes over a certain value I sell, or once it goes under a certain value I buy. That the probabilities of that going right is just so low that you'll definitely lose money. So that's why it's so important to really understand things about price action itself, about like how price looks and moves in certain stages. Right, so we've just done that. I can skip that. Okay, so the first step in the strategy is that you find a currency pair that created a high or a low that is like the strongest of the last 50 candles, and that can be basically on any time frame. I would personally recommend to not just trade this like on super small time frames, like 1 minute chart or so, because there's a lot of I guess you could call it noise in such a small time frame that is just not easy to trade, and it's probably also not worth trading, because you'll probably get less good results. So a good time frame is 1 hour and 4 hour, but of course I think the strategy is quite good for lower time frames too. So maybe 15-minute chart is probably not a bad idea. If I now quickly go back to my charts and show you an example. So if I'm going back to my Euro USD chart, and do ignore the numbers for the moment, this is just this is just my Elliott wave count, so this is for another time. Okay. So basically, if we go on, let's go to the 15-minute chart, okay? It makes it easier to find something quickly for them right now. And let's go back a bit, because I marked out a couple of spaces already, I think. Yeah. Okay. So here we are. So we're looking basically, in this case, because on this time frame we're in a downtrend. Obviously on a bigger time frame we are in a big uptrend, but irrespective of that right now. So we're looking for basically a low that hasn't been broken. There's no lower low than that in the previous 50 candles. And now if you select your crosshair tool, and so you can say, okay, here was a low, and if you now click when you're aligned with this candle and hold down your mouse button, you start this. You'll start to see this number appear. That middle number. So you've got, the first number. So that's currently on 19. That's the candle count basically. So as long as you keep the button button held down and move your cursor, it will continue to change these numbers. And the further back I go, obviously the higher the number of candles go. So now I'm at 50 here. So you can see that basically from my starting point of that low back to where the crosshair is now, it's 50 candles. So that's how you can very easily see how many candles you've got there without having to count them one by one. And so yeah, in this case we see that this is a valid situation so far. There is no lower low than this point in the previous 50 candles. And so that's our first step done. Now, the next step, so once you've identified a spot like this, you've got to then, where are we? One second, please. I'm just skipping through some of these slides again that I'm talking about anyway. Okay, here we are. So once we've identified this low, you've got to also make sure that your RSI reading is in alignment with it. So I'll just make this line a different color so that you can actually see more clearly what I'm talking about. Okay, so I'm talking about this candle here, right? If I get rid of this line, so here you can see, if you look down to your RSI, that the value is just a bit below this dotted 20 line. So that means step 2 of the strategy setup requirements is also fulfilled in this situation, because you've got a low enough RSI reading to confirm that. Now, the next step would be, sorry, I guess I should actually say that this whole strategy, it's a reversal strategy. So we're not going with the previous trend direction, which in this case is obviously a downwards movement, but we're wanting to find the spot that goes in the other direction again. So that goes upwards. And so it's a reversal strategy, and hence you can't, it's really, really important that you don't jump the gun, that you follow all the steps of the system. Otherwise you'll just get burned for no reason and make losses unnecessarily. So in this situation, we've got that step 2 confirmed, we've got the RSI reading at the low, and then we're basically waiting for a lower low yet after that. So once we've done that, you would basically have to wait for a second price low to be formed that's lower yet than your first identified low. And in this case, it did happen. So it bounced up slightly, then went down, and created this low point here. But what you're seeing now is that the RSI reading actually is higher. So even though you've created a lower low, the RSI reading is higher, and that's what you would call divergence. And that's across any momentum indicators, not just the RSI, but basically whenever people talk about divergence, that's what they're talking about. They're saying price is going further in one direction, and yet those momentum indicators who take that take essentially an average historical value, they're saying something different. They're saying, okay, yeah, price is going lower, but in essence, overall, there is not as much power in it anymore. So, and that's why a divergence in that sense is one of the important signals that a trend could be changing. It's not a guarantee that every divergence will create a reversal or anything like that. But it's one factor of confirmation that you want to wait for. Okay. So in this case again here, we've got so far all 3 steps of the setup requirements are here, and I don't know, I guess you might want to take some notes. I think there will be a slide later on that summarizes it anyway, so if you haven't taken notes, that's okay, because there will be a summary that tells you all the steps again. So basically our setup is now virtually complete. We still can't enter a trade, but it's almost there. And because we've now waiting, after this step, we've created a lower low, there's divergence in the RSI indicator because the value is higher than the value when the previous low that's higher than the price low was created. So we've got all of that, and now we're waiting essentially for price to come back up and to at least break the candle that we first identified. So this candle here, the first low that we identified, needs to be broken. So, and we can really, to be fair, only say that this candle, this blue candle here, is the first one that broke it, because it completely closed. That candle close is above the top of the wick of this candle. So you could say, yeah, this mini one is already above the body of this red low candle, but it hasn't really cleared it. So I think I would say that this is probably the better entry, the safer entry, to be sure. And it's only then, once you've got the candle closed above it, and make sure that you do wait for the candle to close, and the next one to start, because I've experienced it many times that you think our price is clearly, going one direction, and you've got a big candle, maybe on any time frames really, but like say whatever 1 hour time frame or so. So your 1 hour candle is about 5 minutes away from closing, looking really strong and bullish, only for in the next 5 minutes the whole candle to just revert and leave you with a huge wick at the top and close bearish or something like that. So really, really important that you don't jump the gun and let candles always close before you act on them in any way. Okay. Back to the slides for a second. I think I'll just swap you back to the slides as well. I will go back to the live chart example soon, but there are some examples already here which I want to show you probably as well. Okay, we've covered all of that. Oh no, this sounds. Okay, this is just all. I'm just skipping all of this because we've covered this already. Yeah. Okay. So, I mean, it's an obvious point, but obviously, if we in the chart I just showed you, we're talking about a downtrend example, but works exactly the same way in the opposite direction. So you're looking then for obviously a candle high, 50 candles that haven't broken that, then a higher high, etc., with a lower RSI value. But we'll cover that in some examples later on again. Okay, how are we doing for time? I think that should be probably still okay. With that said, let's look at our charts. Okay, so we basically covered all those criterias. Yeah, so we're waiting now for that candle to close above the first identified candle. Okay, so let's have a look at this example here. It might be a bit small on your screen, so I apologize if that's the case. But basically, in this example, you can see that here, this is the candle that basically breaks that low point. I believe this should have been the previous low, or they've identified this is the previous low, which I wouldn't exactly call a low as such, but but either way, I think the setup would still be valid if you would take this as the low. So anyway, it was broken, and that's when you actually start to take action and say, okay, I'm committing to this trade. I've taken all the steps, waited for all the confirmations, and now it's time to take action. At the so if we go by this, then yeah, actually you could take the entry around here already, or say here. Sometimes it's actually quite good in a way, because obviously what will happen as you're waiting for the low and then the lower low is there'll be like a little swing in between here, and you've got to always remember that in a way the horizontal nature of price. So obviously the price levels are this way, and basically the time factor is the horizontal axis, price level is the vertical axis. So horizontal support and resistance levels are really, really important, because that's where obviously people in the past decided to make orders, like to sell or to buy. So what I'm saying here, what I'm saying this all for, is that say even if the candle that you've identified is broken, it can be quite useful, unless this goes really far too high and it's not efficient. to just wait for this resistance line in this case to be broken, this horizontal level, then in that case that candle here breaks these tops, and that's good because this candle, maybe if that would have closed slightly lower, like here, it may have still broken the original low, but it didn't clear this resistance, this horizontal resistance line. So what could still happen is that it goes up here and then poof, it hits back down. So that's one thing that you might want to consider to possibly add as a discretionary rule. And you can try it out also. You can, if you're not confident with, like I don't know how successful this is, feel free to just work on it on a demo account or just with small amounts of money. I personally think it's probably better to trade with real money, because you tend to somehow, your psyche tends to take it more seriously then, but just with really small amounts. So whatever, you can trade with 0.01 lot size if you want, or 0.05 or something. A little bit of money, real money, is a good, I think, to get your psychology kind of conditioned, if you will. Okay, so let's not get lost here. Let's move on. So basically, this is your entry signal then, and of course the absolute alpha and omega of trading is you've got to have a stop. So this is might be obvious to most of you anyway, but you cannot trade without placing a stop, just hoping that even if price goes against you, that at some point it'll reverse, because you will pretty much lose your account very, very shortly, because the position will only always be held open as long as your account has still got some money in it, and as soon as the trade goes into a deeper minus than what your account is holding in its balance, then of course your broker will just shut you down, close the trade, and all the money is gone. So stop loss is perhaps the most essential point, and in a way you've got to, even though this is now here shown as step 5, before you enter the trade you must already have worked out a stop loss level for the trade if the entry signal appears, because doing it afterwards could be detrimental, because you might realize, actually I might have to put my stop loss so far away, where there is another support level, for example, that the trade isn't really worthwhile anymore, because the risk is higher than what I stand to gain. So this is actually a really important step to get right in the first place. So in this particular example here, it's actually a good example where you can see that. So we essentially, the entry happens in this situation here, at this line between the red and the green boxes, and in this example the stop loss was placed here. Now, why was it placed here? Well, because here in this beige circle you can kind of see how these candles created a previous support line. Now obviously I can't see from this chart how super solid of a support line this really is, because I can't see more of the past, but let's assume that it was a fairly decent support, and so yeah, it's not a bad idea to put your stop here. I probably would have put it maybe slightly below these wicks. It's always good to put it below the wicks, not just below the candle bodies, because the truth is that price did go all the way to obviously the wick extreme, and so you don't want to get stopped out just by a couple of pips because you do that. So you've got to identify, basically, in a setup where you want to buy, you've got to then work out, okay, where below my entry is a good support level, where I could say, okay, if price breaks that, if price were to, from my entry, fall further and even break that next support level, then there's no more point to try and stay in this trade. And that's essentially what you call an invalidation level, and technical invalidation level. So that means instead of just simply saying, oh, I'll just put my stop loss 20 pips away or 40 pips away or whatever, you actually base your stop loss on a technical analysis of the price chart. So and in this case, we're saying this is a support that we've identified. So that makes sense. It's a technical reason why you place your stop here. Not just, oh, I'll just feel like 15 pips or etc. That doesn't make sense. So you've got to find a good level. And now the reason why you've got to do this before you actually enter the trade is because it affects your what's called the reward to risk ratio. And this is what this slide is already talking about here. It says here 1 to 3 profit versus risk level. So what he's saying is this space between your entry and where your entry would be and where you are planning to place your stop, if we count that as 1, so 1 unit, and you're saying where your intended target is up here, well then the ratio basically between that and that, the green and the red, is 1 to 3. So that means you're risking a certain amount of money within this amount of pips, and you stand to gain 3 times as much if the price hits the target. And that's so important that you go with a reward to risk ratio that's in your favor. Because otherwise, if you say we go for something especially lower than 1 to 1, you will end up struggling to make consistently profits, because when you lose a trade, you will lose more than you would when you win a trade, if it's below a 1 to 1 reward to risk ratio. But just like with the stop loss, your target also needs to be in a way a technical, realistic target. You can't just say, oh, I'll just set it to a 3 to 1 and I disregard what actually price is showing. You've got to say, okay, in this case, where is a resistance level that where price is likely to bounce? And okay, cool. I'm just sorry, I'm just looking at a few of your comments. Great. Okay, fantastic. Nice to see that. Okay, sorry. So back to back to the thing at hand. So here you can see that yes, there is a resistance zone here, because price hit it, bounced off it, hit it again, bounced off, overshot a bit, but essentially it couldn't close above this level. So we had 3 hits at that level, and it could not go. So we can say, okay, this is a good likely zone where price probably will do that again in the future. It might break it, but we can't know that right now. And so for the purpose of this trade, this would be a good technical target. So this, yes, very good example. You can say there's a technical invalidation as my stop. There's a technical zone that gives me enough space where price is able to go to, without too much obstacles in the way of it. And there you go. So once you've got that established, it's really only then that you can say, okay, I entered a trade. So you need to get your stop loss and your targets sorted, planned out in advance. It's all about planning. You need to be doing about 80% or 90% of your work is before, even more so. I'd say 95% of the work is before you actually trigger the trade. It's analyzing the chart, confirming that your analysis is sound, confirming that your stop loss and your targets are realistic, and then you're just waiting for the spot once you've covered all of that. Okay, let's move on. Right, so yes, it's a good idea to follow a 3-to-1 reward to risk ratio. It's certainly very good. I don't know how often that occurs. It might occur quite often with a strategy. I'm just not sure quite about that myself. But I would say even a 2-to-1 reward to risk ratio is not bad. Do you think 2-to-1 is quite valid? Because obviously you're making potentially twice as much money than you stand to lose. So I think that's still good. But if you want to go just for those setups and you find enough setups for what you're wanting to do, that's cool. And in a way, it's really valuable to wait for the best setups only. And that's another such important aspect of trading that I've learned myself also, the hard way as well, that it doesn't pay off to take more trades with sort of half good setups. It's much better to take less trades with the best setups, because it's so tempting to say, oh yeah, but there's another opportunity here and I could make some money, and if I don't take it, well, maybe I'll stand to gain less money. But it just doesn't work that way, because when the setup is just not quite as perfect as ideal, the probabilities are starting to go against you more, and you're going to be struggling then to really get your win ratio right. So important tip: trade less, but only the best setups, and you'll make more money that way for sure. Okay, so now for everybody to recap, this is our recap slide. You might want to maybe take a screenshot of that. I think them will be recorded, the webinar anyway, but yeah, take a screenshot of this and we'll just go through it again. So step 1, find a currency pair and identify a candle of a high or a low that hasn't been, that is the strongest high or low of the last 50 candles. I would recommend probably sticking to 15-minute time frame as your smallest time frame, and upwards from there, really. I mean, I guess there's no point trading monthly chart like that unless you're happy to wait a long time. But it doesn't make any sense. So I think between 15-minute and maybe 4 hours, or daily candles are good too. So 15 minutes to daily charts, that's all good. Right, then the next step is that you're needing to wait. You need to make sure that low or high that you identified is connected with the right RSI reading. So you need to have this in a downtrend. The RSI reading needs to be at 20 or below 20. It needs to touch that line that's shown in your indicator, it needs to touch the 80 line in an uptrend. Then step 3 is you wait for that second low or high, that second peak to form. And of course, we're waiting for that to come in conjunction with a less extreme RSI reading. So you start to see that divergence. And essentially, you're almost ready to go, except I think probably at that point, I would say between step 3 and step 4, after step 3, you check that your stop loss levels and your target levels fulfill those the reward to risk ratios that you're looking for. So you're saying, okay, a technical support level is here, good, that's where I would need to put my stop. My technical target would be here, that's where I would need to put my target. How does that look? You're just doing that in your head or on your chart without taking the trade. So I would say this is step 3.1 or something like that. So step 4 then would be to actually enter the trade once you get the signal, which is when when price starts to break the candle that you originally identified as your first identified candle, and then that's it really. And you place your trade, place a stop loss based on what you've identified in advance. So, again, don't work it out after you enter, work it out before you entered. Okay, so I hope you had enough time to take a look at this, write it down or take a screenshot. If not, I can go back to that slide. I will check the chat later on. Okay. Okay, there's some more examples here. But I have a feeling maybe now it's a good time to go back to the real charts, because maybe that's of more interest to see it actually on live charts, because it's in a way it's a more the real environment where everybody has to find themselves in. Okay, hang on. There's some questions here. Does the strategy work on any element, stocks, cryptos, etc., or only on for forex? In principle, it should work for anything, because it's really a price action based strategy. So I would say perhaps I would be careful with stocks, because they tend to create gaps. They tend to create as in price gaps, because the liquidity is low. So the good thing about forex and most sort of indices and stuff is quite good too. What the good thing about it is that there's pretty much all the time there's somebody who wants to buy or sell at any price level, so you don't get these gaps. In stocks, you will see price opens, moves a bit, and then the next candle might have a jump to the next price level, and that's tricky, especially if you're trying to do this strategy. So I would. That's right. Yeah, cryptos. There's no gaps there. That's got fairly good liquidity, but I'm talking about stocks. Yeah, no worries. Let me just see. If there's any other questions here quickly. Okay, somebody talking about volume being a bit low. I can change that a little bit. Just don't want to overload it. Hope that's a bit better. Should be better. I'll keep it here for the moment. Okay. Cool. Okay, so if you can see my chart, let's just go and dive into some real-time examples that, well, not entirely real-time, but that have happened quite recently, and to see if there would have been a setup. So if I go back to my Euro USD that I showed you earlier on, I think we were looking here. Okay. So this was the low we had identified. We had seen, okay, step 1 is confirmed, RSI reading is low enough, 50 candles, clear, all good. Second low, RSI reading confirms divergence. That's all good. So now let's have a look at this stop and target options. So if we just go, if we don't look at what happened and pretend you say you would be more or less at this point, so you can't see exactly what happens, you could say, okay, for your target, this would be, I'll make these lights white so you can, lines white so you can see them better. I'll get rid of that line, get rid of that line for the moment. So this would be a fairly good resistance level. That could be a potential target. If you go back, so I zoomed out, here's our, sorry, I'll make a vertical line here so that we remember what we're talking about. You can see the price has actually respected that resistance level quite a few times. So I think that would be a realistic target to set from around this entry point. Now, to check for the stop loss, it might be quite good to go to a higher time frame. So I'll go to the 1 hour chart and try and identify something here. So see, and there it's a bit tricky. It's a bit tricky because there isn't a good support level here at all until all the way down here. This is nothing really. This is no. If I go further back, yeah, looking really bad because of course Euro has been in this really strong uptrend. So yeah, of course, it makes sense that you know there's no support. The closest real support that I would say is a valid support is around here, and then of course maybe at the low here as well. But what you can see now, if we come back, zooming in, what you can see now, right, here was our spot that we're looking at. Now, your target, initial target, because we were looking on a 15-minute time frame, so would be here because that's kind of one of the first resistances. But your stop loss to be a technical invalidation or a technical support is all the way down here. So suddenly actually it's more like a 3-to-1 against you rather than for you. So I would say even though essentially what I've looked at there fulfills all the main criteria, you can see what would have happened potentially if you would have entered that trade and then only later on thought about your stop loss and your take profit levels, because it's not looking great. And yes, you can say, oh yeah, but it went well, right? It actually didn't go lower, it went up.
so far. Yes, we can say that in hindsight, but at the time we don't know, and the potential for it to have fallen further was there. So that, for example, would have been a setup to say, yes, okay, even though it looks okay, it's better probably not to take it. Hope that's quite clear. Okay, so I'm just looking at your chats. Okay, Joseph, yes, that's true. There are two moving average lines. Exactly, and they're based on the high and the low, and the period is 21, is the 21 exponential moving average, 21 EMA. So I use that in my trading. I use basically this band because that creates like a zone for me, because the moving average is obviously an average, and you can get like the false perceptions that it gets broken. Like say for example here, price breaks first that moving average, but actually bounces off the low of the same moving average. So it creates this zone where I gauge price at. And the other moving average, this one is a longer term moving average, that's 144 exponential moving average, which gives me obviously a bit of a longer term picture. And I can talk about this another time. Let me go back. Yes, that's right. They change color. They change color automatically, basically, once the angle changes from bullish to bearish. It's just a visual thing. You can just use your standard ones. I actually, not even, to be honest, to be sure. Sorry, a bit stick. I'm actually not too sure how to even get hold of them. I think I got them from somebody a while ago. But just use your normal moving averages. They work perfectly fine. Can you get the computer to find these setups? Yes, well, David will get to that point very shortly, because trading strategy guides have developed basically an indicator that does exactly that. So we'll be talking about that very shortly. Okay. There's lines on the chart. Sorry, I'm just checking for a few other things, a few other questions here in the chat. Okay, no, that's it so far. Cool. I'm not sure. I think I'm running a bit behind time. Let me just check with my colleague. But let's look at another example, for example, which I pointed. The next one example that I wanted to highlight was, for example, here. Now, if we go back to the 15-minute chart. Okay, I just do show you quickly one more example here, and then I'll be wrapping it up. So we've got almost a setup here. If we check, we have a low. Are we having 50 candles? Yes. So from that point, 50 candles is here. So in that sense, it is valid. And the RSI is almost touching the 20 line. And those are sort of moments where you have to be discretionary where you've got to say, okay, well, do I do it or don't I? There's a little factors in trading, and it's in some ways it's not a bad idea to be an absolute stickler for rules in trading and say, okay, it missed it by a tiny amount, so it's not a valid setup for me, but it is very, very close. So some people who want to be more discretionary, you could say, okay, that's fine. Now then next we get a lower high, a lower low, but definitely between from this point to this point we have a definite divergence. So here it's quite good. And what we're having now, of course, is you can say, all right, well, we have a support level here from this previous bottom, and you could argue, okay, price has established something there. It's clearly been rejected off that level before, and now that we've got actually this previous point established where we in principle shouldn't really have taken the setup, this sort of lines up with kind of this level here, this level here on the left, where there was a bit of a bounce there as well. It's still a bit weak, but at least you have starting to have more points. It's still a bit iffy, but I'm happier because we had this point, and you've got a rejection of that point again for the second time already. So in that sense, you could almost say, all right, aggressive traders, you can put your stop loss just simply below that low, and go for it. Once the low, sorry, I'll just zoom in here again. Once that low is broken, once the price breaks the identified low candle again. So in this case, it was quite abrupt. It shot up. So your entry would have been fairly high. So then you need to consider that too, right? If your entry was here, then and a potential target area was already around here, then the reward to risk ratio doesn't look that great again either. It's probably about 1-to-1 or a bit less. So of course it would be very different if this would have just been here, if the candle wouldn't have been such a strong candle. I don't know, something like here. And then you've got you can see that central number there, here 661, so that's your amount of pips. And that's not you've got to take the last digit away, so it's like a mini pip. So 661 actually means 66.1 pips. So you've got 66 and 30. So you've got above a 2-to-1 if that candle would have closed here, but it closed up here, so you would have gotten a bad entry. You could wait for the price to come down and then enter if it were to come down here. In this case, it didn't. So again, it's probably a setup that you wouldn't have wanted to take. And that's essentially how you, go along, and you've got to be patient and not jump the gun and find the right setups that really are great. They tick all my boxes. Having said that, though, there is a quite exciting thing that trading strategy guides have come up with, which is and basically an indicator, a custom indicator that does exactly that strategy, and basically highlights all these. Sorry, jumping the gun here a bit.
Sorry, guys. Okay, so one second here. I'm just gonna flick through these examples. Yeah, we talked all about that, risk management. Yes, so one very quick note, quick but very important. You've got to calculate your trade size relative to the stop loss that you set. And just really quick, but I do want to get that message across. You can't just trade with the same lot size on every setup, because basically different setups will require you to set your stop loss at different distances. So at one setup you might be able to set your stop loss 30 pips away, while in the other you might have to set it 60 pips away to get, to come to a technical invalidation level. But of course, if you trade with this exactly the same lot size, it will mean that you're risking twice as much on the trade that has a stop loss of 60 pips versus the one that has a stop loss of 30 pips. So that's why you need to calculate your lot size relative to how far away you're setting your stop loss. So essentially, if you wanted to take the same risk on both these setups, one where your stop loss is 30 pips away and one where your stop loss is 60 pips away, you actually have to trade with half the lot size on the 60 pip stop loss trade. Only then will you risk the same amount of money compared to the one on the 30 pip trade. So basically what you've got to do is you've got to decide how much am I willing to risk per trade from my account. And it's very true to say that I think between 1 and 2% is really good idea. 2% is still quite okay. So once you work that out, how much is 2% of my account balance? In money values, like say, whatever, for example, if it's $100, 2% of my account balance is $100. Then you have to say, okay, that I need to then spread out over the size of my stop loss. And you probably might know that basically if you were to trade with one full standard lot size, basically one pip movement is about $10 worth of risk or gain, profit or loss. So what you have here then, you've got to say, okay, I'm wanting to risk $100 and I want to spread that over a certain amount of pips, say 60 pips, because that's where I put my stop loss. So you then go 100 divided by 60, $100 I want to risk divided by 60 pips means you're allowed to risk $1.66 per pip of movement. Now, that tells you now, okay, I'm allowed to risk $1.66 per pip of movement. This means that my lot size has to be 0.16, because we'll talk about that in other webinars as well, but basically because your full 1.0 lot equals about $10 risk per pip, then 0.16 lot will mean about $1.60 risk per pip. So that would be the correct lot size for you on that specific trade. If your stop loss size is smaller, you will make it your lot size will increase with which you can trade. If your stop loss size is bigger, it will go smaller, and that's how you keep your risk balanced. Okay, that's enough of that. Okay, yeah, that's right. So we talked about all of that. Okay, so back to this. Basically, what's really exciting is that all these steps, they have been automated
actually buy an indicator that the trading strategy guides have developed, and it's a really good one. It's it basically highlights all of this analysis that we've talked about automatically for you. You still have to execute the trades if you like what the indicator is highlighting, but it certainly actually saves you a lot of time. So, and there is a special discount offer that's available for attendees right now, which I will show you a link in a moment. And I'll show you the indicator itself just to see what that looks like. So you've got a 10% discount that will be offered if you go for it after this webinar. And this is it. So this is the EFC indicator that I think you will be able to download. Let me just speed through this a bit. Yeah, so like we said, the indicator, it will work on any time frame, and any market essentially, because like we said, it's a price action indicator, so you can use it across the board. Really, I would, like I said, just keep away from stocks probably. Yeah, so where are we? Yeah, let's go to the features. Okay, here we are. So what it does is it basically goes through this, it highlights as the setup is forming. So here it changes basically the colors of the candles on your chart. As a low gets created that is that hasn't been broken for the last 50 candles, you start to see these candles change into an orange color. And then when divergence is appearing by creating a lower low and the higher RSI reading, you'll get these dark blue candles. So that's the next phase getting detected. And then you also get the actual entry signal when they change into green and you get an arrow. It will probably, I think it even does take profit levels and stop loss levels all at once. So that's good. You might want to just check that they are based on good good invalidation and technical targets and technical stops. But I think they're probably quite good. But either way, so it takes a lot of the work already out of your hands, but you're still in control. So it doesn't just fire away without you noticing. It'll you can say, okay, let me have a look, and there you go. And I think there's even a better feature, which is like a dashboard, so you can get an overview of all the signals across many instruments at the same time. And like I say, it works on different time frames, so therefore it's good for swing traders, day traders, and scalpers. Yeah, so there's examples on different time frames. Here you've got you've got a daily chart of the US yen. Then sorry, you've got an hourly chart here, and then you've got also a 15-minute chart. So it's just examples, we don't have to stick to this. So that's what I wanted to show you. It's the dashboard. So you can select the markets that you want the dashboard to monitor, and it will actually highlight as and when setups appear on the selected markets. Sorry. So that is a really, really handy feature, because that can take a lot of time monitoring different markets, coming back and forth, etc., etc. So I think this is really an excellent feature. Otherwise, you might spend a lot of time, if you want to constantly wait for setups manually.
which is really, really nice. So FCT 2.0 setup. So obviously it got upgraded. It's got trading alerts, mini charts, size adjustments, color adjustments. So you got more features basically. And it's available for MT4, MT5, TradingView, and also NinjaTrader 7 and 8. In case some of you are using that. That's cool. So, like I said, it's I think there's a lot of indicators out there. I think that sell for a lot of money, and it's hard to know if they are really that good. You know, it's hard to tell. But and often, obviously, it's not just indicator. We've talked about other things. You do need some extra training, and that's where training strategy guides really want to help you further as well. That not just giving you something and then not giving you sort of, you know, contextual support that you need to implement it well. Yeah, so hence this is the discount of 10%. And I think this is the link. Simply visit the link that we have provided, I think. Enter the coupon code so you can get started today. So I believe this is the link. tradingstrategyguides.com/EFC webinar. And the coupon code is RSI. I'll go back to it. I just want to quickly skip through these, browse through these slides just to make sure I don't miss anything, and then I come back to the link. Yeah, so if you've got any questions, definitely we're all here to help. So don't hesitate to ask questions. We've got a really nice high customer satisfaction rating. We value each and every member, of course we do. It's a you know, a mutual relationship. Yeah, so this is it. So back to our link. Here is your link, tradingstrategyguides.com/EFC webinar. And the coupon code is RSI. And I believe this is it for today. Thank you for kind of bearing with me while I'm half sick and coughing. But I hope you enjoyed it. Does it work on any device? I'm not sure what you mean by device. I think as long as you've got one of those trading platforms, it should work. Olusola. So if you have like a tablet, thanks for the wishes. If you're on a tablet or something, then and you've got your MetaTrader platform on there, so that should work perfectly fine, I believe. Cool. The discount is 10%. Cool. Great. I think that's probably it. There's definitely obviously will be in the chat room, so for any other questions. So thanks really much for attending. I'm sorry I went over time. I believe it's a wrap, and I'm sure we'll see you soon again. Bye for now.